Last week was a wild one where we saw a nasty down day on Thursday, only for Friday to come back and make a new all-time high. Is this the start of a major reversal, or is this nothing more than a simple stock market rotation? We start off taking a look at the Fear and Greed Index. We are now back into greedy territory with a reading of 56 out here on Friday, but we keep getting warnings like this. Fame Economics, who called the 2008 recession, shares 5 signs the U.S. is on the brink of a downturn. Now, this very well could be the case. However, could they also have it wrong? We come over and look at the S&P 500 versus HYG. Now, as the S&P 500 was able to come up, make a new all-time high, HYG is getting very, very close. It's looking very constructive, but something we do want to pay very close attention to. And that's when we come over and we look at the yield curve. When the yield curve uninverts, that's when big problems in the stock market start to happen. Going back to the 1960s, every time that the Fed has went on an aggressive rate cutting campaign, it has left devastation out here in the stock market. Now, one of the big beneficiaries as of lately is a Russell 2000. Even on Friday, with a nasty sell-off towards the end of the day, we can still see the Russell was up 1.17%. And we actually have 2 days back-to-back with quite large gaps. Are we going to see some backing and filling coming in this week? And if you look at the Russell, it is above the recent highs. But I want to remind you guys, the Russell 2000 is still miles away from all-time highs. But we look at the Dow Jones, we see the Dow Jones was actually able to join the Cool Kids Club on Friday, making new all-time highs. Then we look at the sectors on Friday, everything was in the green except for communication services. And we look at the 1 week performance. Real estate really led the way. And a lot of that was thanks to the Fed's expectations of cutting rates. We can see now that the Fed is expected to cut rates September, November, and even in December. Now, let me know, do you guys agree with this or not? Will the Fed be cutting the rates 3 times this year? And more importantly, if the Fed does cut rates, is this actually good, or is this a warning sign that the Fed has already broken something? Let me know your thoughts in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, last week, we saw some economic data come out. On Wednesday, we had the CPI data come out, and it came in better than expected. But when we come over and look at how the futures markets and the indices handled it, here's when the CPI data came out. Big rocket ship on the way up, only to come back lower. And then we come over to Friday and we look at the PPI data. The PPI data did not come out as good as expectations. And what do we see? S&P 500 dip lower and then go up on what seemed to be not so good of news at that point. Now, we did have more news coming out at 10 a.m., but look at preliminary sentiment. Came in worse than expected. The inflation expectations did come in slightly better. When we look at the economic calendar for next week, what do we have on deck? Well, on Monday, we have the Empire State Manufacturing, but then Jay Powell is going to be taking the podium once again at 12 p.m. And we're going to see, will Jay Powell be able to keep the rally alive, having stocks make new all-time highs, or is he basically put the nail in the coffin? We look at some of the high flyers, some of the AI stocks that we've been seeing. Now, keep in mind, earnings season is back in play. And next week, we have a slew of earnings to be released. But when we come over and look at what are the big expected movers out there, on Wednesday, we have United Airlines at plus or minus 9%. We have ASML plus or minus 7%. And let's not forget, on Thursday, we have Netflix plus or minus 9%. And we also have Taiwan Semiconductor coming out on Thursday as well, plus or minus 8%. So if we come over and take a look at some of these charts of expected big movers, United Airlines not looking so hot. Looks like it may want to come down, fill in the gap. Well, what about Netflix? Netflix was down on both Thursday and Friday. And are we going to start to see Netflix starting to unwind, coming down lower, and finally testing out some of these high volume areas that we have on the chart? And keep in mind, when we look at some of these stocks, the more stocks that appear ready for a correction, the more likely the stock market will come under pressure. We come over and take a look at Meta. Meta on Friday was also down 2.7%. We come over and take a look at Microsoft. Microsoft has had a little bit of a pullback off these highs, and now we got to ask ourselves, is Microsoft going to try to work itself back over to this high volume area on the composite profile? Keep in mind, high volume areas act as a magnet and attract price down towards those areas. We come over and take a look at the dollar index. Dollar index on Friday selling off, down 41 cents on the session. And now the question is, will this low give way? If the low gives way, that is going to favor the bulls in the market. And why might that be? Well, lower dollar favors the bulls. We come over and look at 10-year yield. The yields were down as well on Friday. And if the yields continue to drop, that also is going to favor the bulls in the market. So you might be saying, Mike, are you saying we're going up? No, I'm saying it depends. We'll talk about what it depends on here in just a few moments. We come over and look at crude oil. Crude oil is really having a hard time. Crude oil's had a nice lift off the lows. Now the MACD indicator is starting to look a little bit weak. We still have this rise in trend line. We'll see if we can come back over and regain that trend line or not. For the moment though, we are still below that trend line. So we got to proceed with caution. We come over and look at gold. Gold really looks like it wants to make a run towards all-time highs. We'll see if it comes up here, rejects and goes back down. If it does, I would still be on the lookout for another push up and out, or maybe we just blast right through it right off the rip. Keep in mind, as the Fed starts to cut rates, gold is going to be a big beneficiary of that. And the dollar is also going to start to weaken dramatically as well. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day. And you can also get a 150K account for only $40. You get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, before we come over and look at the Nasdaq, let's take a look at Tesla real quick. Tesla came right up into our resistance level. We had that nasty day down on Thursday. Then on Friday, Tesla was able to regain some ground, up $7.20. Now, will Tesla finally start to come back lower, filling in some of these other gaps? Now that we're in earnings season, is that going to be a catalyst for a little bit of weakness in the stock market? And with a shakeup within the presidency coming up in the very near future, is that going to provide some more volatility for us in the stock market? Speaking of volatility, we look at the VIX. On Friday, the VIX was down, and you can see we are very close near 52-week lows once again. A lower VIX, dips tend to be bought, but also when the VIX is substantially lower near 52-week lows for a volatility spike at any moment. Now, let's jump over and take a look at the Nasdaq. We're going to start off looking at the QQQs on a weekly chart. Notice what we get. We basically have a candle of indecision. We have a wick on the top, wick on the bottom. However, when we come over and we look at this on the daily chart, we did not see a very bullish closing candle out here on Friday. Yes, the candle was still green. However, they wicked it to the upside, which means there are sellers lurking up here, which are able to drive prices a bit lower. We come over and we grab our Fibonacci retracement tool and we measure this last leg up of the move. And you can see we've basically come down to the 38% retracement. Now, I would not be the slightest bit surprised to see the Qs come down towards the 61.8 level, about 484, 485, somewhere in that ballpark. But we really got to be open to the idea of if things really start to get ugly, and we start to see a spike in volatility, that we can unwind a lot of this. However, we want to take this one day at a time. We look out here on the 30-minute chart. Here was a minus development area that we drew out from Thursday. Look right where the market came right up to. What do? We rejected right back down from that level. And you can see the MACD indicator right now is hovering near the zero line. So we got to ask ourselves, do we have a huge edge in the market in terms of direction? The answer is no, but I also want to make you guys aware of a potential pattern, which means if we start breaking below 490.77, that would set up an A to B equals C to D pattern. Now that pattern would complete down here at about 486.75. So this is something we do want to keep on our radar, but guess what? If we cannot come down and break this low, there's no need to worry about it. And we're also in Monday morning before the market opens, we'll talk about these volume profile levels. I want to get a chance to see how the market opens up on Sunday night and how we trade overnight. But if we start breaking even value area low, we can look to target the swing point down here and then look to target with a runner down here towards that ABC pattern completion. Now we come over and look at the futures markets. I warned you guys about this last Sunday, the fact that we closed way above value area high from the weekly perspective. Now, when we do that within the next 1 to 2 weeks, it was highly probable we were going to come back and test that level. What did we do on Friday? We tested that level and then we shot back up. Now, when we look at this week's volume profile levels, you can see that value area high is up here at 20,776. The point of control is at 20,636 and value area low coming at 20,495.50. So look, we're basically closing right within value. So unlike last week, we don't have a case where we can simply trade back the value. But what we can do, if we start breaking value area low, I want to target the lows from last week. Then I want to go ahead and target this distribution area on the weekly profile along with the composite profile, knowing that we still have an untested point of control down here at 20,001.2. So if things really get ugly this week, this point of control and this high volume area are going to both be areas I do most certainly want to pay close attention to. Now, if we grab our Fibonacci tool and we measure A to B equals C to D, notice where that completes, very close towards that point of control. Let's not be too surprised if price actually makes it down towards that area. Then as we come over and look at the daily profiles, what do we have? Well, we came right up into where that minus development area that we had drew out last week. We came right into the bottom of it. We rejected back down. Now, when you look, we still from last Thursday have an untested point of control. We also have an untested point of control from Friday. And we got to ask ourselves, what is likely going to be the outcome? If you're wanting to be bullish this market, then you want to pay very close attention to this minus development area. If the market comes down here and we reject and start going back up, this is going to be an area where you may want to look for a possible reversal. If we flush to the other side, then that's when I really want to start targeting the point of control. Now, keep in mind, value area high out here from Friday comes in at 20,663.00. The point of control will be down here at 20,429.50, and value area low will come in at 20,380.50. So how do I want to play this? Well, one, if you're looking to be aggressive on the buy side, wait and see, can we get into this minus development area, maybe a quick little flush down, and then look to buy it on the way back up. If indeed on a smaller time frame chart, we get some type of reversal pattern. However, I'm not just simply going to put a limit order here because it's a minus development area. This gives me an area on the chart to look. Then I need to look for a trigger point for a reason to get into the move on a smaller time frame chart. Now, as we come over and look at the S&P 500, we can see we had a much stronger close than what we saw in the Nasdaq. We still have a little bit of a selling tail on top of this candle, but then we come over and we look at the daily chart, we can see out here on Friday, we were actually able to make another new all-time high in the market. Then we look out here on the 30-minute chart. This was one of the areas that we talked about. We had another minus development area right up here. We blew through all of those areas on Friday. And now the question is, how much lower are we going to go? If you notice, we do have a minus development area right down here, and that comes in anywhere from about 558.80 down here to a price point of 558.00. Now, when first time we come into that area, I expect to get a bounce, and we'll see, will it be a little feeble bounce, or will this be a rejection where we just simply go ahead and go to all-time highs in this market? We come over and look at the futures markets, we can see it's very, very clear. Top one, top two, we have the potential for a double top pattern. And if we go ahead and we mark off where this double top pattern would complete, that would bring us all the way down here to 55, 34. And notice what is significant about this area. One, we have high volume on the composite profile, but we also have an untested point of control. Let's also remember we have an untested value area high from last week off the weekly profile at 5578.50. If things really start to weaken throughout this week, this is going to be my main runner target. And maybe I'll hold out hopes that we can make it all the way down here towards that point of control and high volume area on the composite profile as well. So if we start breaking that swing low, watch out, we are likely going to go substantially lower. Then as we come over, look at the daily profiles, notice value area high is all the way up here, 5695.50. The point of control comes in at 5667.50, and value area low will come in at 5648.00. So how do we want to play this? Well, we're basically right here at the point of control, but I want to look for potential rejection points, and that would be easy by just looking at these minus development areas within the profile. Now you might say, Mike, what is a minus development area? Just think of it's a very thin structure, meaning the volume profile does not stick out very far to the right. So I'm going to go ahead and draw out this little zone right here. Now I want to see, do we basically flush down there, let's say Sunday night or early next week, then potentially simply reject back up and maybe start testing some of these other high volume areas. Now, we do not have any chance of a volume profile rotation trade until we can get outside of value area low or outside of value area high. For instance, if we break above value area high and we start coming down, then I will want to play the rotation down. But in that case, I would want to target some of these high volume nodes before using the point of control as a target location. However, if we break value area low and then we start coming up, at that point, I would want to use the point of control as target number one on a potential move back up higher. If you guys want to learn 3 ways to profit off using moving averages, watch this video right here.